Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories of the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look at key data in the U.S., how it's going to impact Fed policy going forward. I'm John Tucker in New York.
I'm Caroline Hipker here in London, where we're looking ahead to the European Central Bank's upcoming rate-setting meeting.
I'm Doug Krisner, looking at the rollout of the iPhone 16 and what it means for Asia.
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Hi, everybody. I'm John Tucker, and let's start today's program with key data in the U.S. We're going to get, among other things, CPI data Wednesday at 8:30 Wall Street time. How's the data going to impact the Fed at its September meeting? And for more insight, we're joined by Stuart Paul, U.S. economist with Bloomberg Economics. Dr. Paul. Anyway, I was all prepared to talk about inflation, CPI. That's in the back seat, maybe even the trunk of the car, and in the driver's seat, I'm going to guess, is jobs data, right?
Right. So we have jobs data in hand that just came out on the 6th. Then they surprised the consensus to the downside, showing just 142,000 jobs added. This is, other than the inflation report, basically the last important data set that the Fed is going to have in hand. And with the labor market deteriorating as much as it has, with the unemployment rate climbing to 4.2%, the Fed is shifting its focus from inflation to the labor market. That's
but 142,000 jobs created, non-farm jobs, that doesn't sound too bad. I mean, are we just reverting back to where we were pre-pandemic?
Well, so you're right. In a typical set of circumstances, the pace of hiring that would be consistent with a steady unemployment rate is about 100,000 jobs per month. So 142 could sound pretty good by comparison, but with the surge in immigration, with people considering holding off on retirement, with the unemployment rate rising, we need to find a way to reconcile what we're seeing from unemployment and with what we're seeing in terms of hiring. So 142,000 just isn't enough to do the trick anymore. We are seeing the labor market cooling. We see just about 1.1 job openings per unemployed worker. That's down from about 1.2 openings per unemployed worker pre-COVID. So the labor market is undoubtedly cooling, despite what might seem to be a decent pace of hiring.
The Federal Reserve has this dual mandate, full employment and stable prices, or however they phrase it. It's really difficult, I would imagine, to kind of thread that needle.
It certainly is. They are two different prongs of the dual mandate. As you said, maximum employment and price stability. Sometimes those two things can be in conflict. And right now, the Fed is at one of those moments in time where it has to balance their two priorities. Sure, it wants to really suffocate inflation and ensure that it's on a sustainable path to the 2% target. But the labor market is showing a bit of fragility. We are seeing the unemployment rate on an upward trend. And as we saw in the July data, the SOM rule had been triggered, which typically portends further rises in the unemployment rate.
Although that's come into question by Claudia Sommer herself.
That's right.
She's like, but still contends that there is now not necessarily a recession in the offing, but I think she put it, a risk now of recession.
That's right. Even with Claudia saying that there's a risk of recession, I would still think that she's a little bit more optimistic than we are here in Bloomberg Economics.
Uh-oh.
I know. I'm sorry to say, but we think that the outlook is a bit more weak than Claudia herself seems to think, and we think that risks are far more notable than Claudia seems to think. Consumers have just been running down their savings. They've been saving, they saved at a 2.9% pace. So that's 2.9% of their disposable income went to savings. That's exceptionally low.
We should point out consumer spending is like the biggest thing in the economy right now.
Definitely.
That's what powers the U.S. economy.
Definitely. That's what powers the U.S. economy, and it's consumers' willingness to spend that can propagate inflation.
But there's a credit card.
That's right. There is a credit card, but I don't know.
Are they running up debt? And does anybody care if they are?
They're running up debt. They're also seeing rising defaults. And so we could expect credit availability to become a little bit less available. And look, interest costs are also starting to weigh on consumers, especially consumers at the lower end of the income distribution.
All right, so that brings up the question that everybody's asking. The Federal Reserve, it's kind of baked in the cake that the next meeting this month, they're going to cut rates. But the question is how much? By 0.25% or 0.5%?
The odds slightly favor, just slightly favor a 0.25 percentage point cut.
But why?
September.
I mean, why not just go all the way? We know, as you just said, things are slowing down.
It seems to be that the fear among policymakers is that if they start with a 0.5 percentage point cut, markets are going to expect that there are going to be further 0.5 percentage point cuts coming down the line, particularly in October, November, and then December. And if markets start baking in that expectation, financial conditions loosen, and it actually, perhaps counterintuitively, means that by signaling that things are slowing down and cutting rates rapidly at the start of the cycle, they'll then have to maintain a more restrictive stance because financial conditions have loosened. So the more cautious approach might just be to try to not scare the markets by doing this 0.25 point cut first, and if they need to catch up later, they'll catch up later.
Okay, so the CPI report coming out, Consumer Price Index. Do I care about inflation anymore? For it was like a couple of years, we're all afraid of inflation, including the Fed.
Look,
Can I just forget it?
I'm an economist, and I can't help but care about inflation forever and always. We are expecting the pace of headline and core inflation to remain about steady on a monthly basis. 0.2% for both the headline and core on a month-on-month basis. Base effects will allow the annual pace of CPI inflation to fall to 2.6% from 2.9%. But if you combine the line items from CPI with the line items from the producer price index, also to be released next week, and you take into consideration the negative base effect in the PCE price index, which is what matters most for the Fed, the pace of disinflation is going to stall pretty notably. So that's one of the reasons why we expect the Fed to be a little bit cautious in that pace of cutting, why odds just slightly favor that 25 basis point cut in September rather than the 50.
All right. Great explanation. I appreciate it. Our thanks to Stuart Paul, U.S. economist with Bloomberg Economics. Well, it is a big week in politics ahead. The first presidential debate between Vice President Kamala Harris and former President Donald Trump set for Tuesday. And Bloomberg Television and Radio is going to have special coverage of this ABC News debate, along with a global simulcast starting at 8 p.m. Wall Street time. And for more on what to expect, we are joined now by Laura Davison, Bloomberg Politics Editor. Thanks for being with us. Appreciate it. So this is going to be a reasonable exchange of differing ideas or a wild free-for-all?
The idea is that it's a reasonable exchange, but if past is any precedent, it may be a little more raucous. There have been some measures put in place to sort of turn down the temperature on the debate. The first is that there will be no studio audience. It will just be the candidates and the moderators in the room, so they won't have any sort of input from folks on the ground in terms of booing or cheering or
screaming,
laughing.
Booing, and cheering. Okay.
Correct. The other thing, and this has been a real point of contention in recent weeks, is that candidates' mics will only be live when they are speaking. When they are not speaking, when a question is being addressed to another candidate, that the other candidate will have their mic muted. So this is intended to not have some of the crosstalk and the talking over one another that we've seen particularly in 2020 and debate with Biden and Trump.
Now,
we saw it was.
Did one campaign or the other insist on this, or they both agree? I mean, they obviously both agreed to it, but was one more persistent about it?
Well, there's a little twist here. So originally when Biden was still in the race, this is one of the things that his campaign put forward and said, look, we want these muted mics. And at the time, Trump resisted it, but ultimately agreed to it. And that was the case in the June debate. Then when Harris became the candidate, her campaign said, no, actually, we don't want muted mics. We think that this is actually an advantage to us to be able to interject, or also, for Trump, he'll have like sort of less guardrails on him, less discipline, and he'll be able to sort of interject. So the Harris campaign really pushed to have the mics unmuted. Ultimately, they acquiesced on that, and ABC came out and said, look, there will be muted mics. If we need to at some point, if things get out of hand and it's just completely unclear to the audience what is happening, we may unmute the mics, but we can expect that we won't be able to hear a candidate if they're not it's not their turn to answer a question.
Oh, we already heard from Donald Trump. He contends that Vice President Harris has already gotten the questions. I mean, there's absolutely no evidence of that, right? I mean, it sounds like he's already giving excuses for why he may not do as well as some hope he does.
Yes, and this is a game that he plays before a lot of appearances of kind of, beefing up his opponent and sort of, kind of downplaying his own potential performance. He did this before the June debate. It was talking all about what a great debater Biden is. Of course, that didn't, end up being the case, and that, Trump really came out ahead out of that debate. But he's been talking for weeks about how, he sees ABC News as, quote, fake news, unfair. So he's a little bit trying to sort of, kind of give himself an out if the debate doesn't go super well for him, that he can say, look, I told you so. ABC wasn't going to be fair to me.
Is this going to be the only debate?
It's very likely it may be. There has been discussion about another debate. Trump has said he wants to do one on Fox News. Harris has said she won't do that. We do have a debate for the vice presidential candidate scheduled, but this may be the only time that we see Harris and Trump on the stage together battling it out.
Do debates matter? I mean, I should say leading up to this, Joe Biden obviously had a poor debate, really bad debate performance, and dropped out. Thus, we have now Kamala Harris. But what is the history of debates, the candidates' performance, and whether it amounts to people voting for them or against them?
So in recent history, the thinking has been that debates don't matter that much. It may help give you a little post-debate bump of a point or two, but that things may revert back to the mean after a week or so. Obviously, you don't have to look any further than Joe Biden and ask him if debates matter. If a debate this cycle clearly upended the race and essentially forced a candidate to drop out and a new candidate to take his place. So there's a lot of interest in this debate for obvious reason. This will probably be the largest audience, that the candidates will have, before people go to the polls. Another thing that's important too is, compared to, 10 or 20 years ago, people are voting a lot earlier than they used to. A lot of states have early ballots that'll start to go out. Early voting will start happening in a lot of places. So, people may see this debate and, within a week or two be able to vote. So things that happen in October or early November don't matter as much because, millions of people will have already had an opportunity to cast their ballot.
We can't wait. Our thanks to Laura Davidson, Bloomberg Politics Editor. And a reminder, you can listen to special coverage of this presidential debate Tuesday on Bloomberg TV and radio, along with a global simulcast. This all starts at 8 p.m. Wall Street time. Just ahead on Bloomberg Daybreak Weekend, I'll look ahead to the European Central Bank's upcoming rate-setting meeting. I'm John Tucker, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead of the top stories for investors in the coming week. I'm John Tucker in New York. Up later in the program, a look ahead to a major product showcase from Apple where the iPhone 16 is going to be center stage. But first, in June, the European Central Bank cut rates for the first time in 5 years, making the move before its counterparts in the U.S. and the U.K. And now traders are betting on a further reduction as policymakers prepare to meet in the coming days. And for more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
John, when the EU became the second major global economy to cut lending rates this summer, it cited progress made on tackling inflation. Now, in the coming days, officials are widely expected to once again reduce borrowing costs when they meet in Frankfurt after June's landmark decision. But while the next 2 or 3 reductions in the deposit rate from the current level of 3.75% are unlikely to cause major friction, things could get a lot more contentious purchase once interest rates fall to around the 3% mark, if indeed they do. Sources tell Bloomberg that the rate-cutting debate could soon run into differing views on both the price outlook and the point where monetary policy stops restraining economic growth. With European inflation plunging, markets and analysts reckon that borrowing costs might even be between 2 and 3% by the end of the year. It's food for thought, isn't it, for Europe's central bankers, who widely agree that there is room to cut rates further. Now, they'll also need to consider the impact on businesses, particularly those operating within financial services. Recently, the German government announced plans to dilute their stake in Commerzbank after high interest rates boosted the bank's profitability. As Bloomberg's European finance reporter Stephen Ahrens explains, fluctuating lending rates are directly correlated with the bank's fortunes.
I mean, yes, the government would have to achieve a much higher price for it to break even. But, it's water under the bridge. Essentially, what they're looking at is the share price rally that's been happening at Commerzbank for the past 4 years, really, thanks to interest rates hikes by the ECB. And that share price, is just much higher than it used to be. And they're seeing an opportunity to take advantage of it and, make some money, I suppose.
OK, so it's opportunistic, perhaps, given the recent history of Commerzbank's share price, even if over the longer term they don't make money here. What does it mean then, Stephen, for Commerzbank itself? When we speak to them about this, and Kriti was reminding us, we talked to the CFO about this very subject recently, they usually say, well, that's something you've got to talk to the government about, obviously. And what does this mean for the bank?
Well, I think if a big investor decides sort of to sell down a stake in a company such as Commerzbank, it sends a signal, we don't expect the share price to go up much higher and for longer. And so other investors will probably think about, what does it mean for us? We have reported previously that Commerzbank is looking for fresh investors. And now that the biggest one is reducing its stake, I think that task is becoming even more urgent for them. And those will be the challenges facing Commerzbank CEO Knof and CFO Orlob for the next months and even years.
That was Bloomberg's European finance reporter Stephen Ahrens speaking there. So, will it be another rate cut in Frankfurt? And how will the central bank navigate the uncertain path ahead and how they communicate all of that to the markets in Europe? I've been discussing that with Bloomberg's Europe economy reporter Alex Weber.
As you just said, another cut next week is almost fully priced. Investors have little doubt that it's going to happen. We've also heard from policymakers that they're really ready to consider another cut. So that was already a pretty strong signal. The data on the economic front has developed more and less in line as the ECB expected. And the latest forecast was based on another cut in September. So these two things combined means that it's probably going to happen.
OK, and if policymakers do lower interest rates again, does the path then surely become a bit more complicated?
So from what we heard is that another cut in December looks pretty likely, but then interest rates come closer to a level that economists call neutral. And that means that the discussion becomes a bit more complicated because on the one hand, ECB officials need to decide whether they want to stop restraining the economy, whether the economy actually needs some help from interest rates, whether they need to be lowered any further. And the other complication is that this so-called neutral rate is pretty difficult to estimate and observe. So it's hard to base policy upon it. But on the other hand, it's pretty important. So there's going to be, the discussion is just going to become a lot more complex as we,
As we move forwards, yes, absolutely. Does a rate cut suit Germany? I mean, that has been one of the key issues in Europe, the kind of waning industrial power, the weaker economy in Germany.
Yeah, some economists have observed recently that Germany is actually in need of lower interest rates much more than the rest of the Eurozone. Other countries are growing more strongly. Germany, as you know, is very reliant on its industry, and if borrowing costs remain higher than investments are becoming less attractive. It's only one part of the story, but lower interest rates would probably help German industry to some extent, yes.
What sort of pace can we expect when it comes to the cuts from now, do you think?
So economists have long estimated that there will be quarterly cuts. That's for several reasons. One is that the ECB publishes economic forecasts once every quarter. That's also going to happen next week, coinciding with a likely cut. The other reason is that they're very focused on wage data because the ECB is afraid that elevated wage growth could stoke inflationary pressures, and this sort of information also comes at a quarterly pace. So all of that makes it more likely that, or it points to the baseline as for quarterly cuts. In between is not ruled out, but it would probably need some surprises in the data for that to happen.
Well, inflation was 2.2% in August. Is the battle for dominance over inflation complete then? I mean, that's very close to the ECB's target.
Yeah, exactly. It's just barely above the target. But one important reason for the slowdown was a dip in energy costs, and that's also because energy prices were so volatile last year. So it's partly a statistical effect. And when you look under the hood, there is still services inflation that's running at twice the ECB's target. That's causing some uneasiness because it's really determined by domestic factors like the wage growth that we already talked about, the labor market, and as long as services inflation stays elevated, then the ECB is not going to sound all clear. So it doesn't have to be that all components of inflation go back to 2%. But at the moment, there's still too much discrepancy, and we also expect inflation to come back toward the end of the year because these statistical effects on energy are going to become less favorable.
In terms of the policymakers who make those decisions, how united are they in terms of the strategy?
So they've been relatively united. In recent weeks, we've heard different emphasis from them. So there's one cohort in the 26-member governing council who emphasized the economy, the sluggish economy. That points to a preference for somewhat faster interest rate cuts. On the other hand, we have some who keep emphasizing the components of the inflation basket that are still too elevated. So you have just a different emphasis really at the moment. So there is some friction, I would say, and that could come depending on how the economy develops. That could even become more pronounced in the coming months.
Okay, that will be something certainly to watch. What will lower interest rates mean for the European banking sector?
So the banking sector has long enjoyed a windfall from higher interest rates. We've already seen that this is now slowly coming to an end. Interest rates have already been lowered on mortgage credit. So for them, it's a new chapter than if the ECB goes ahead with lowering interest rates.
And just lastly, what do we expect to hear from policymakers in terms of guidance? You're very cautious, obviously, from Christine Lagarde in a lot of her press conferences. What do you think that we'll hear from policymakers from their guidance?
Yes, that's a good question. I suspect Lagarde will stick to that total openness because otherwise the risk is always that the ECB stokes market expectations for more cuts, and they're afraid of causing somewhat an overreaction. So, there's probably little upside in giving much guidance at this stage. So Lagarde might well stick to what she said in the past, is that they are going to remain data dependent, and the path, especially for the next meeting, is completely open. Whether she gives any signals for further down the line, something very cautious, I mean, that can be ruled out. But my suspicion is she's going to be very open at this meeting.
That was Bloomberg's Alex Weber speaking to me. My thanks to him for looking ahead to the ECB's interest rate decision on Thursday, the 12th of September. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. John.
Thanks, Caroline. And just ahead on Bloomberg Daybreak Weekend, a look ahead to a major product showcase from Apple. I'm John Tucker. This is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead of the top stories for investors in the coming week. I'm John Tucker in New York. Apple is going to hold a major product showcase on Monday, and the iPhone 16 lineup will be center stage. The launch may mean gains in market share for Apple suppliers in Asia. And for a closer look, let's get to Doug Krisner, co-host of Daybreak Asia.
John, the event is titled It's Glow Time. I think the question is whether it will produce a glow for Apple. iPhone demand has been stagnant. For nearly 3 years, unit sales have been nearly flat. And, according to Bloomberg Intelligence, much of that volume was driven largely by the need to upgrade iPhones sold 3 and 4 years ago. So with the iPhone 16, much of the hype, as we know, revolves around the suite of AI tools branded as Apple Intelligence. Now, analysts at Bloomberg are predicting the replacement of aging phones will continue to be a big driver of sales for the iPhone 16, much more so than Apple Intelligence. Our analysts are saying Apple Intelligence will likely have a greater impact in fiscal 2026. Well, beyond AI, the iPhone 16 is expected to have several upgrades, larger displays, additional capabilities for the camera, to name a few. And these changes have created opportunities for Apple suppliers, especially since Apple has been working to diversify its supply chain right across Asia, not just in terms of component manufacturers, but among assemblers as well. I spoke earlier with Stephen Tseng. He is Senior Tech Industry Analyst for Bloomberg Intelligence in Hong Kong.
Apple does have the tendency to keep only a handful of supplier in certain components, or sometimes even just keep a sole supplier. I think it's better for it to control the quality and the delivery. In the near term, we may not see any major increase in terms of assembler, but then in certain markets, for example, like India, they start working with Tata for the iPhone assembly. So if they are doing a good job, Tata, if they're doing a good job, then hard to tell. But so far, I think we're still looking at 3 major suppliers in the assembly side.
When it comes to the parts manufacturers, are they at a state right now in terms of their production capacity where they can meet what you think is going to be a little bit of a pickup in demand? Do you think that that's probable, or are we maybe going to have a little too much demand and supply is going to take a while to catch up?
I think in terms of capacity, I don't really see any major issue, given that we're not the overall smartphone obviously become a much more mature market as a whole. So the capacity issue to some extent is probably more about relocation as the supply chain is trying to cope with the geopolitical tension. So some component supplier might be forced to relocate. But so far, for the like a camera, we don't really see a lot of relocation happening. I think component suppliers are still generally cautious.
He is Stephen Tseng from Bloomberg Intelligence. Let's continue the conversation on the iPhone 16 and Apple's supply chain across the Asia Pacific. Vlad Savov is with us. He is Bloomberg Tech Editor in Hong Kong, along with Newly Purnell, Asia Tech reporter, also based in Hong Kong. Good of you guys to join us. Vlad, let me begin with you. I want to understand how well prepared Apple is for this launch.
Well, an Apple launch is one of the best orchestrated events on the tech calendar. It's actually remarkable. I was thinking recently that every September we get a new iPhone. We get tens of millions of units distributed and prepared across the world. You can never doubt Apple's preparation. The question to my mind is how well Apple does in selling this AI pitch like we've just been discussing. How well does it translate to consumers? Apple has been the one company in the tech industry to take these rather elusive things, simplify them, make them relatable to consumers, and make them a reason to buy a device. They've done it with so many things, whether it's making the camera more relatable, video recording, people have ditched their actual cameras and replaced them with iPhones. The real question is one for the entire industry, how well can Apple sell AI? Because it will affect not just Apple, but the broader industry.
Newly, when you consider AI, this is something that Apple obviously has invested a great deal in. How high are the stakes?
I think the stakes are high, and I think what I'm anticipating and what I think others are looking at is whether sort of easier access to AI tools will really start to translate into real-world applications. So in other words, we see the sort of revolution that's being created with access to things like ChatGPT, which is a sophisticated technology, but it's a chatbot where you enter text and you get a response. I think if smartphone makers like Apple can start to introduce some of those features into the device that people already use, so you don't have to sit at a computer to use it or go to a special website or open an app. If you can bring some of these features closer to how people use their phones, which are so attached to us throughout the day, I think we could see more consumer adoption and could see more real-world applications for this kind of nebulous technology that people have been talking so much about how it's going to change the world. If Apple can show some of these some of these applications and some of these use cases for this technology right on the device, I think that would be exciting to see.
And the interesting thing to my mind is that will not translate into an immediate surge in sales. One of the fun things with iPhones is that there's a lot of peer pressure that happens. So if these AI features do find an audience, what will happen is you will notice it in your friends and neighbors and family members using these features. They will write better emails all of a sudden. And it's because they're using the AI, making them more concise in their messaging. They will send you fun auto-generated images and you ask, where did you get that from? And they will say, it's only on the latest iPhone. So one of the issues that Apple has actually faced in recent years is the fact that after the first surge of people having to upgrade because of the annual upgrade cycle, sales just kind of drop off. During the first half of the year, Apple is starting to struggle. It's had to do discounts, unprecedented ones in China, just to keep sales going for the iPhone. And one of the fascinating things is the dynamic of people buying the iPhones in the latter half of the year, then that translating into more people being attracted by the AI stuff, and that potentially lifting sales in the first half of the year where Apple has its difficulties.
Newly, when you look at the parts suppliers in the Pacific Rim, I mean, does this launch do anything for greater diversification? When you build out something like this, do you want to make sure that your supply chain is much more robust than it's been in the past?
Yeah, and for some time, Apple has been really interested in diversifying its supply chain, particularly in countries like India, where I was based before and where we've done some great reporting on the advances that Apple has been making in accelerating the speed with which they can create newest versions of the iPhones in India. So it's not simply lagging behind when they're made in China, for example. Now they're getting closer and closer to being able to release the very top-end new iPhones in India. So, for example, that allows them to diversify a bit away from the mainland because of the geopolitical issues between the U.S. and China. And over the years, they've been really trying to build up their network of component makers, suppliers, and capacity in India. And so I think that's something really interesting to watch. And of course, India is an increasingly important market for actually selling its phones. So they're going to export a lot of these from India, but also they want to appeal to this 1 billion plus person economy as well.
Vlad, as I mentioned earlier, much of the hype is focused on this AI tool, or tools plural, with Apple Intelligence. When you look at what companies like Samsung or Huawei even, what they are doing with respect to AI, is Apple a little behind the curve?
I wouldn't say so. I think it's still extremely early days. Some of the demos that I've seen from Chinese smartphone makers are really fascinating. They're compelling. One of them is this idea of turning AI into an agent. One of the companies, Honor, which is a spin-off from Huawei, they showed me an AI demo where the AI agent went into all their apps, such as WeChat Pay, Alipay, and it pulled out all of a user's paid subscriptions. And then you could just tell it by voice, cancel all my paid subscriptions because I'm tired of those. I find that a very interesting and a very compelling use of AI, just simplifying a lot of these processes and kind of the fiddly aspects of using a phone and internet services. But that is still so early. It's so premature to say that this is the decisive or the winning feature, whether that's for Chinese manufacturers, whether it's for Samsung, whether it's for Apple, or even Google. I mean, one of the interesting things is that Google advanced the launch of its new Pixel phones earlier this year to go straight up against the iPhone. And that's precisely because Google believes that it has the better AI, But like I say, it's still way too early to tell.
So, Newly, when we look at Apple products generally, I know that they are considered to be kind of a luxury item. The price point with this new rollout is probably going to be high relative to some of the other smartphones in the market, whether it's China or India. Is there going to be appetite, do you think, for the market to kind of support what Apple has aspirationally in terms of total units sold?
Well, we've seen in China, actually, that they've been losing market share with the new Huawei device, which is a direct competitor, the Mate 60, Huawei's high-end smartphone. We see Apple, China's a huge market for Apple for selling iPhones. I think there's still appetite there, but certainly they've come under fresh challenges from Huawei and other makers there. And then in India, also a massive market. For a long time, they've had a tiny market share in India, primarily because the device is so expensive in a market where consumers have less purchasing power. But they have made advances in India over the years, in part because by manufacturing the devices in India, the taxes are lower, so they can bring the price down. And there's been some interesting advancements as well on the retail front, with Apple last year opening its first Apple stores ever in India, and Tim Cook visiting the country last year. That helps with branding, and when you have actual shops people can go into and see how the devices work, that's been a boost for them too. So I think certainly in India, and they have, of course, a wider variety of devices, the less expensive ones, in addition to the newest ones coming out. So I think that they're quite bullish on India. So yeah, China, maybe growing pressure from Huawei and other competitors, but India, I think, starting from a slower base, a lot of room to expand, and I think they're pretty excited about India.
Vlad?
And Apple really might need India because Huawei scheduled an event the day after the iPhone event. It's literally hours after. Our reporting shows that it's going to be the world's first commercial smartphone with 2 folds in it. It's going to be a groundbreaking device. Huawei is really making a push. And an interesting thing is that Apple fell out of the top 5 in China in the June quarter. It has a real challenge, as Nuala says, in one of its biggest markets. So it's going to need India. It's going to need to remain strong in the US. And again, it all goes back to AI, just like with NVIDIA and all the other companies that we cover. AI is the real critical thing. And I also talked to another one of the Chinese smartphone manufacturers this past week, and I asked him, do you have a plan B if consumers don't respond well to AI? And the answer was just no.
Newly Purnell is Asia Tech reporter. He's based in Hong Kong. And Vlad Savov is Bloomberg Tech editor, also joining us from Hong Kong. Thanks so much to both of you for helping us set up the launch of the iPhone 16 and understanding some of the ramifications for the part suppliers in the Asia Pacific. I'm Doug Krisner. You can join Brian Curtis and myself weekdays here for Bloomberg Daybreak Asia, beginning at 8 a.m. in Hong Kong, 8 p.m. on Wall Street. John?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm John Tucker. Stay with us. Top stories and global business headlines are coming up right now.